jumping straight into something pretty significant happening on Capitol Hill. It's called the Genius Act.
That's right.
A bill focused on regulating certain cryptocurrencies. And it just moved forward in the Senate. Big vote, 66-22, this past Monday, the 19th.
Yeah, and what's really interesting here is the political dynamic. You had some Democrats opposing it, apparently linked to President Trump's crypto activities.
Right.
But it still got support from 16 Democrats, think Senators Booker, Schiff. So it shows things are, well, complicated when it comes to crypto regulation.
Definitely complex. Okay, so let's unpack this Genius Act. The main target seems to be stablecoins.
That's the core of it, yes.
The name sounds, well, stable.
Yeah.
But what exactly are they? Why are lawmakers zeroing in on these specifically?
Right. So a stablecoin at its heart is a digital currency, but it's designed, engineered really, to keep a stable value, usually pegged to something like the US dollar, but it could be gold or another asset.
Hey.
The main goal is to cut down on that wild price volatility you see with, say, Bitcoin.
Ah, okay. So less roller coaster, more predictability.
Exactly. Which in theory makes them better suited for, everyday stuff, transactions, payments.
That makes sense.
More practical.
There are different ways they try to achieve this stability, though. Some hold actual dollars in a bank, some use algorithms, some are backed by other cryptos. It's not all one mechanism.
Interesting nuance. So practicality seems key. What does the Genius Act actually do about them? What are the main rules it's trying to put in place?
Okay, there are several sort of key pillars in the bill. First, and this is a big one, it says issuers must hold reserves.
Reserves, like actual assets.
Yes, reserves of the underlying asset dollars, usually that match the value of the stablecoins they put out there. Think of it kind of like bank reserve requirements. It's about ensuring the backing is actually there.
Okay, so if people want their money back, the issuer should have it.
That's the idea. Basic stability, consumer confidence.
Got it. What else? Second, it tackles bankruptcy. If an issuer goes bust, the stablecoin holders get priority for repayment.
Ah, so protecting the users.
Exactly. Another layer of consumer protection, trying to prevent people from losing everything if a platform collapses.
Makes sense. And number 3.
Third, issuers have to comply with certain anti-money laundering rules, AML, and anti-terrorism financing sanctions.
So bringing them more in line with, like, traditional banks?
Pretty much. Aligning this part of the crypto world with the established financial crime rules.
Okay. And I remember reading something about public officials.
Yes, that's in there too. It specifically prohibits members of Congress and senior executive branch officials from issuing their own payment stablecoin while they're in public service.
Clearly aimed at preventing conflicts of interest, I imagine.
That seems to be the direct intention, yes.
Okay, so these sound like, fairly logical steps towards bringing some order. Who's cheering for this bill? What's the argument for the Genius Act?
Well, supporters see this as a really pivotal moment, kind of a landmark effort. They'd argue it's the first real comprehensive attempt to put guardrails around a major part of the crypto industry.
Formalizing things.
Exactly. They believe it offers needed safeguards for consumers, which we just talked about. And interestingly, they think it might actually encourage traditional financial firms, like banks, to get into the stablecoin game.
Oh, why is that?
Regulatory clarity. If the rules are clearer, established players might feel more comfortable entering the market. The broader argument is that this clarity could boost the whole digital currency market, make it more legitimate, maybe spur growth.
So stability through regulation could lead to wider adoption.
That's the hope, that stablecoins could become part of the normal payment systems, maybe even challenging credit cards or traditional banking in some areas.
We actually have a quote here from Christian Catalini. He's at MIT's Crypto Economics Lab.
Ah, yes, Catalini.
He's a supporter. And he says, this sets the stage for these assets to go mainstream. That's quite a statement.
It is, and he expands on that. He also said, this opens the floodgates. You'll see entry by many issuers. Consumers will all have more choices. This will bring more competition and innovation in payments.
So more choice, more innovation, because the basic safety net is supposedly there.
That's his view. He thinks it shifts the burden. Instead of you, the consumer, having to figure out who's trustworthy, the regulation creates a baseline, and then companies compete on, how good their product is, the features, the fees.
Interesting angle, shifting competition. But obviously not everyone's on board.
No, definitely not.
What about the critics? What are their main objections to the Genius Act?
Well, the critics, and Senator Elizabeth Warren is probably the most prominent voice here, they essentially see this bill as, weak, They describe it as industry-friendly regulations that don't go nearly far enough.
Weak how?
Yeah.
Not enough protection.
Their core argument is twofold, really. One, it doesn't adequately protect consumers from the risks, and two, it doesn't do enough to police illicit activity, like money laundering or terrorist financing, that might use stablecoins.
Senator Warren didn't mince words. We have her quote, too. While a strong stablecoin bill is the best possible outcome, this weak bill is worse than no bill at all.
Yeah, that's pretty stark. It shows a deep dissatisfaction with the level of regulation proposed.
So what specific weaknesses are causing that kind of reaction? Is it just general weakness, or are there specific points?
A major flashpoint, and this ties back to the politics we mentioned earlier, involves potential conflicts of interest, specifically around President Trump.
Ah, right, his crypto ventures.
Exactly. His company, World Liberty Financial, launched a stablecoin, USD1, back in March.
Okay.
Then just earlier this month, May, an investment firm in Abu Dhabi used that specific stablecoin, USD1, to make a massive $2 billion investment in the crypto exchange Binance.
Wow. Okay, so the connection is Trump's company's coin was used in a huge deal.
Right. And the concern, voiced by critics like Senator Warren, is that this setup could potentially allow Trump's company to profit from deals facilitated by its own stablecoin.
Even with that rule about officials not issuing coins while in office.
That's the argument. Critics say the bill might stop current officials from launching new coins, but it doesn't necessarily prevent them or their companies from benefiting from coins issued before or from transactions involving those coins.
So a potential loophole.
That's how critics frame it. Senator Warren argued the bill provides even more opportunities to reward buyers of Trump's coins with favors like tariff exemptions, pardons, and government appointments.
Strong words and potential ethical questions there.
Definitely. Now, it's crucial to add, President Trump has denied any wrongdoing in this matter.
Of course. But the situation itself highlights the concerns critics have about the bill's thoroughness on ethics and conflicts.
Precisely. It becomes a focal point for the argument that the bill isn't tough enough.
Okay, so let's try and pull this all together. We have the Genius Act. It's trying to build a regulatory house for stablecoins, reserve rules, bankruptcy protection, AML compliance.
That's the framework.
Supporters say, great, first step, needed clarity, fosters innovation, brings things mainstream.
Right. Opens the floodgates, as Catalini put it.
But critics are saying, hold on, this house is built on shaky foundations. It's too weak, doesn't protect consumers enough, and leaves these big ethical questions, especially around potential conflicts of interest like the Trump situation, wide open.
That sums up the core tension pretty well. It's that classic push and pull you see with new tech. How do you regulate enough to protect people and ensure stability without, stifling the innovation that might actually be beneficial?
And the ethical dimension, especially with prominent figures involved, just adds another layer of complexity.
Absolutely. It's not just about the tech or the finance. It's about trust and governance, too.
So, thinking about you, our listener, this isn't just abstract policy. If stablecoins do become more mainstream, potentially helped by laws like this one, they could genuinely become part of your financial life, a tool you use.
Yeah, they could pop up in payment apps, online checkouts, who knows?
But this whole debate around the Genius Act really shows that how we get there and what rules govern it is still very much up for discussion.
Exactly. Which brings us to a final thought for you to maybe mull over. When you look at fast-moving tech like crypto, what do you think the right balance is between letting innovation run free and putting up guardrails?
Yeah, how much oversight is necessary to build real trust and make sure this growth happens responsibly? What does this whole situation make you wonder about where digital money is headed?